Well, hello, friends, and happy New Year, happy Lunar New Year for those of you who celebrate. This is, in fact, the week of, and so happy Year of the Horse. But welcome to today's live level up conversation. Let's get started.
And now, get ready. I present to you Level Up with Winnie Sun. Market updates. Award-winning financial pro. Welcome to Level Up with Winnie Sun.
Well, hello, friends. It is wonderful to be here with you. Happy New Year. It is a happy February, of course. Those of you who are brand new to the show, welcome. I'm Winnie Sun, your host and award-winning financial pro, a Forbes contributor, and a CNBC council member. And we are streaming here live all over social media. So jump in, say hello, just like Sadiq did, and introduce yourself. It is great to be here with you. Let's tell you, well, the market's about to close and it's green. I'm glad we went live today because yesterday wasn't so good, wasn't so hot. But currently, let's just say the Dow is up 212 points. Nasdaq's almost there, up 198 points, and S&P 500 is currently up 45 points. We're literally down to the last couple minutes before the market closes. So I think pretty safe to say at this point we're probably going to end up in the green. Now, one of the big stories that came out this week actually came out today. And I don't know if you've heard this yet, but if you didn't, this is the big news. The Supreme Court has officially struck down President Trump's tariffs. This is a major headline showing up all over financial news. CNBC is bringing it to you, of course. The Supreme Court of the United States has struck down a big portion of President Trump's tariff agenda and a 6-3 ruling. Chief Justice John Roberts wrote that the law used to justify the tariffs does not authorize the president to impose tariffs without clear approval from the U.S. Congress. Now, Justices Clarence Thomas, Samuel Alito, and of course Brett Kavanaugh have dissented, but these tariffs were sort of largely imposed under the International Emergency Economic Powers Act, or the IEEPA, which does allow regulation of imports during what they consider national emergencies, but it doesn't mention explicitly tariffs. So the lower courts had already ruled that the tariffs were illegal before the Supreme Court upheld those findings. But why this is significant for all of us is because this is not only just a major setback to the Trump administration's signature policy, but tariffs we know were central to President Trump's economic and trade strategy. Now, this also says precedents and is saying that this does limit presidential power. The ruling actually reinforces once again that Congress actually holds the constitutional authority to tax. Now, the big question though that you should be asking is then what happens to the $175 billion potential tariffs that were collected? Is this going to come in the form of refunds? Now, obviously, this, and I mean, ideally, I'm sure many of you who are watching would be like, "Oh, great! Maybe I'll get a tariff refund check. I could use it for a number of things, hopefully retirement planning." But nonetheless, you can imagine how difficult that would be to quantify how big a check each one of us would receive. Now, of course, the Supreme Court did not clarify whether previously collected tariff revenue must be returned. But as you can imagine, that sounds very sticky and a little bit difficult to do. But I hope that it happens. I think many of you who are watching are hoping it happens because many industries, in fact, here in the United States have blamed tariffs for higher costs and supply chain disruption. If, in fact, a lot of company costs, especially sort of in the middle sector, not the huge, largest companies, not the smallest businesses, but sort of that mid sector, a lot of businesses have, suffered because of higher tariffs. In fact, some companies have had to not only shut down but also let go employees. So it definitely had a lot of impact. So there is definitely a positive to tariffs. There's also been a negative to tariffs, but nonetheless, it seems the Supreme Court has decided that a good chunk of these were actually not legal. So tariffs have been generating sort of substantial revenue for the US government, estimating ranging from $129 billion specifically to the IEPA to as high as $289 billion in total of last year 2025 collections. So quite a bit of revenue. Now, President Trump has argued that tariffs could, in fact, at some point replace income taxes, and even fund $2,000 tariff dividend checks to many Americans. But critics have argued that tariffs acted sort of as a national sales tax, increasing consumer prices, increasing things that you and I buy each and every day, adding to inflation. And the Supreme Court ruling that this could force the administration really to pursue new trade strategies through Congress or alternative legal authorities. In fact, right before I jumped on here with you, I already see headlines coming out that President Trump and his administration are looking at other ways to do other types of tariffs that they hope will become legal so that they can continue to receive more revenue to ideally bring down the U.S. deficit as well. Now, speaking of the deficit, I really wanted to hone in on this as well because I think this is something important for us to understand. It was been talked a lot about this week in financial press as well. At CNBC, the New York Times, many publications are talking about this record level of trade deficit, and the number is eye-opening. It's $901 billion. The goods gap continues to hit record levels. The U.S. trade deficit of $901 billion in 2025. Now, do you know that it was slightly down from the previous year of $903 billion, but the goods trade deficit hit a record high, even though the overall deficit narrowed slightly due to a growing services surplus, but nonetheless, imports rose 4.7% to 4.3 trillion, and exports, when we send things out, rose 6.2% to $3.4 trillion. Now, so, what did the tariffs actually do under President Trump? Well, so that 10% baseline tariffs and targeted levies, they were imposed, and companies sort of front loaded imports so ahead of tariffs because many companies knew tariffs were coming. So, they started to buy things ahead of time so that they could have something to sell that were a little bit less expensive, get us to the holidays and whatnot. But imports from China definitely fell nearly 30%, shrinking the China goods deficit to $202 billion, which is the lowest in over 20 years. However, there's a big however, the trade actually just shifted to other countries, including Vietnam, Mexico, India, Taiwan, Southeast Asia, where deficits actually hit record highs. So, although many goods still contain Chinese components from China, that just routed through other countries. So we're talking electronics and semiconductors. Those were largely exempt, but pharmaceutical imports, of course, increased, and U.S. manufacturing actually lost 80,000 jobs over the year. So the net was that although trade, so our tariffs did take place, but trade was just like reshuffled, not really dramatically reduced. So that didn't help things. In fact, that's what we want to talk about next, which is the federal debt, because this is sort of the bigger discussion and what they're talking about in Congress. Okay. The federal debt is actually projected to reach 120% of GDP by 2036. That's in 10 years, which would exceed post World War II levels. So the US government is expected to run $23.1 trillion in deficits over the next 9 years. Now, tax cuts cost $4.7 trillion, so a big chunk of that. Tariffs may bring in hypothetically 3 trillion, but now with the Supreme Court ruling, that number probably isn't going to be as large. But revenue, of course, is uncertain. And of course, now with the hearing, we know that number is probably going to go lower. So there's got to be some other way of doing this. Now, Social Security's trust fund could also run out of money by 2032. Um, and and one big thing I want to mention now with lower immigration, this may actually also, analysts are saying, reduce tax revenue by $500 billion over a decade, because a lot of the immigrants who were in the United States actually were paying taxes. So that's something to pay attention to. Now, in addition to this, you may have been seeing some of the news coming out of the decision of whether or not the U.S. government under President Trump is going to be deciding whether or not to strike Iran within the next sort of, I think now it's like 8 or 9 days, because originally it was within 10 days. Now, if you've gone to the pump to fill up your car, if you have a gas powered vehicle, you may have noticed that gas prices have gone up. Now, this is being shared on CNBC, of course, and as well as other financial publications. But President Trump says that he's going to decide within sort of 7-10 days now whether to launch a military strike against Iran. So U.S. Crude oil prices did increase about 2%, roughly $66.68 per barrel. And so this definitely make prices go higher at the pump. My husband actually took our van this week to fill up, because I'm like, I hadn't filled yesterday because I follow financial news. I'm like, it's probably going to get higher, so you might as well. We need to use the car this weekend, so go ahead and fill it up. And he definitely said he saw the price go up. But that being said, we'll see, what unfolds in the next week or so, and we'll continue to update you on that. But this is what I'm going to say. If you have to travel, let's say this coming weekend, and you need to go, you need to fill up the pump, just know that it's probably a little bit more expensive than before. It is what it is, right? Some things we just can't control, and this is probably one of those things. Now, the other thing that I want to share with you is talking about what's happening about the U.S. economy. So we talked about tariffs, right? We talked a little bit about taxes. We talked about the deficit. Now let's talk about, though, sort of the economy in general, because what's happening with the U.S. GDP? Well, the GDP actually grew at about 1.4% annually in the fourth quarter of last year, which is down sharply from 4.4% in third quarter. So for the full year, the economy grew 2.2%, only slightly below 2024's 12.3%, which shows sort of some resilience. It shows that, well, most of U.S. households continue to sort of, at least on paper, seem like they're able to weather higher prices. But we know that with higher inflation, consumer prices have risen about 2.9% in December, year over year. And job growth has definitely showed weakness, slowed significantly. And we're talking manufacturing. We talked about how manufacturing lost a lot of jobs, despite the fact that that tariff policy was designed to sort of boost that sector, boost manufacturing, but didn't really happen yet. Of course, AI investment has surged, driving about 3.7% of growth in business investment in fourth quarter. So that's helping the GDP. Other sectors, including housing, factory construction, those sectors continue to struggle a bit. So what's driving the economy, you might be wondering? Well, first off, of course, people shopping, you and I, consumers, right? We're still driving the economy. And all the big spending happening in artificial intelligence and technology. We're seeing data centers. That's where a lot of GDP growth is occurring. So, of course, we're not completely sure of how this tariff story is going to unfold. We heard of what the Supreme Court announced today, but we also see President Trump on the opposite end already looking for other ways to make up some revenue. So currently, we will say this: the stock market looks, at least currently, quite strong, and this has boosted, of course, the portfolios of households who have investments in the financial markets. And of course, analysts are saying, well, those who typically have investments in the financial markets tend to be like, middle class and above, versus creating sort of a widening economic inequality to those on the other end of the spectrum. So tax cuts, Federal Reserve rate cuts, well, those could all support growth in 2026. So let's see what happens. We'll continue to pay attention to that and see what the Fed has to share there too. And yes, it is wonderful to see you, Sadiq. I want to say a quick hello. Thank you so much for your kind comments. Wow, so many of you joining us today. Thank you so much for being here. But why I want to talk about the economy, though, is that I think it's important for us to think about as we plan our own sort of financial picture. It's not just sort of this like, yes, we're Americans and yes, we're here in the United States, but that the government does what they do and it sort of impacts us and we have no way to control it. But actually, when you have information like this, you can actually start to plan for yourself, not only today, but into your future, right? Into your like retirement or your pre-retirement, or if your kids, are going to be going to college, or if you have parents that are elderly, or you have loved ones and they're not sure whether or not they're going to be able to keep their job. These are sort of things that we want to be on top of so we can sort of make decisions that hopefully benefit us instead of waiting and like I didn't know this was going to happen, I didn't know it was happening. Well, now you're sort of keeping in touch with sort of the big picture as well as the smaller picture. So I'm going to get more into detail on that, because here is something that we know, that growth is currently very uneven, right? There are some people that are benefiting and there's others that aren't. There's a lot of people that have been losing their jobs for a number of different reasons. And that is something that, unfortunately, with the continued growth and just the trajectory of artificial intelligence, could be a reality for more and more people. So we want to plan ahead. And so I want to segue over to one story before we get into that. And that is, I don't know if you know this, but it's kind of big news. And if you work at Amazon, or if you, I guess if you work there or you're in leadership there, congratulations to you, because Amazon, well, believe it or not, just surpassed Walmart in growth and reinvention. This is reported by NPR. Probably for many of you watching, that's probably not a huge surprise. Maybe some of you are just surprised that it didn't happen already. But yes, Amazon is now the world's biggest company by sales, because for the first time, Amazon brought in $716.9 billion, which is slightly ahead of Walmart's $713.2 billion. Okay, no shame there. I mean, you're talking billions. This is still huge numbers. But this is sort of a slow, steady race, not an overnight win for Amazon, because Walmart did dominate for nearly a decade. They have almost 11,000 physical stores, over 2 million employees. But the big difference and why Amazon has now taken the lead, of course, is technology. Amazon's cloud business, Amazon Web Services, AWS, is growing so fast as companies rush to build artificial intelligence tools. So it's sort of like that online versus in-store power. That's what they did. So Amazon leads in e-commerce. Now Walmart still dominates, of course, physical stores, but it of course is also rapidly growing online sales, which is up 24% for Walmart as well. But that was sort of news that came over there. So yeah, I just thought you should know, because I mean, I thought it was a little surprising. It's like, I mean, some of this news is really fascinating. Another thing I want to talk about that I don't know if you've been following, but I think it's important to know is what's been happening with social media. Now, I know you're here with me on social media, but social media, I think in this form is good because it helps us be able to share ideas and share information and get feedback from you live and very quickly and very efficiently. But there's sort of that, you know, the flip side of social media, the not feeling so good parts of social media, that mental health component. Well, this is reported by CNBC as well. Mark Zuckerberg recently had to come to Los Angeles to do something maybe he didn't really want to do. I don't think he likes doing this, because I've seen like footage of him in a suit in a courthouse, and it just looks so uncomfortable. But Mark Zuckerberg had to testify in a major Los Angeles trial examining whether meta platforms like Instagram actually harm your kids, younger users. Now, Mark, of course, has said that he actually contacted Tim Cook in 2018 to discuss teen safety and well-being. But this is sort of being called like this moment's big tobacco moment, questioning whether platforms are actually knowingly designed to be addictive or harmful in ways for our children and sort of next generation. I would say it's not just children, because I see plenty of adults that are literally on their phone and scrolling bit by bit by bit. So I think this is like probably addictive to not just kids, but everybody who is on these platforms or who spends a lot of time on these platforms. Now, lawyers, of course, presented internal documents referencing goals to increase engagement time. Now, Mark has said that increasing time spent was sort of not a formal company objective, but the trial examined Instagram's cosmetic surgery, beauty filters, or potential for mental health impact on teens, and evidence does show that millions of those under 13 are users. And so Mark has said that Meta removes accounts it identifies as underage, though. And but they're saying that they probably, need to do more. I think that's what the lawsuit is saying. So the lawsuit is involving other companies. There's other lawsuits involving like Snap, TikTok, and other social media platforms, just talking about how there needs to be stronger age verification systems and just finding ways not to have people like completely just addicted to the platform, where they feel like this almost becomes like a modern day pacifier. You have nothing to do, you're lonely, maybe you're sad, maybe you're just depressed, or maybe not even depressed, you're just bored. Well, they just tend to like scroll and go through the reels and just, I mean, you've seen it's a big thing. All right, let's move over though, because this is a story that I think could be positive, and so I want to put this on your radar because I don't think this is one of the big headlines, and this is coming from the New York Times, talking about something coming out of 24 states here in the United States are considering bills that would allow you and I to plug smaller solar panels directly into our wall outlets. So Utah has become the first state to pass this law. Last year, in fact, unanimous, allowing plug-in systems up to 1,200 watts without any utility approval. Now, these systems cost around $2,000, sometimes less abroad. I'm guessing if this becomes more popular, the price of these will come down, hopefully, and can power small appliances like a laptop or even a refrigerator. Think about how that great that would be, right? Like if you could keep your refrigerator powered by the sun because of solar panel. I think even with the solar panels, I think you still have to have the electricity working though, so they may not completely work in that example, but I'm sure they're going to find a way. So then this idea, of course, was inspired by Germany's balcony power plants, where over 1 million homes in Germany use plug-in solar units. Now, states such as here in California and New York are looking at similar legislation to remove regulatory barriers. But supporters say that these bills cost the government nothing and help consumers offset rising electricity prices. I think this is smart because think about it, right? We know with more AI adoption, these data centers, there's going to be so much usage of electricity, and some utilities, electrical worker groups, of course, are saying, well, we don't want these bills. They think that they could be safety concerns. But I think like the world is sort of going in that direction. We realize that my son actually, my 12-year-old son told me last night, he said, Mommy, did you know that in like, a very short amount of time, there will not be enough gas, period. There just won't be enough based on current usage. And it was very shocking. But the younger generation knows this. So why don't we try to find a solution rather than just saying it might not be safe, it might not be safe. Let's be honest. If there's a way to do it safely, and you and I can figure out how to safely set one of these systems up. I mean, 1 million people do this in Germany. I feel like it's something we should at least consider. So, just so you know, that's what's going on. I want to make sure that you heard that as well. So speaking of, how he's just talking about how Meta was going through this lawsuit with Mark Zuckerberg. Well, YouTube is going through that as well, and they have their own case, and they're sort of arguing like whether or not they're traditional. YouTube is like traditional social media or not. So they're having that crisis as well, and that's happening. But speaking of crisis, this is the one that I really wanted to put on your radar. This comes from CBS News this week. talking about a retirement crisis. Now, these conversations are never comfortable, and I get that. And I see Joshua. Thank you so much, Joshua, for being here live. It's great to have you back. But these are the conversations that I want to make sure to put on your radar because you need to know. And if you follow this show, you know that my motto is like, friends, don't let friends not know about financial information so that they can help themselves into the future, right? It's kind of like that whole Wayne Gretzky quote about like, you know, making sure you know where the puck is going. So this is where one of the financial pucks is going, and I want you to think about this just for a moment. Okay, there is a retirement crisis here in the United States. So the median U.S. worker here has only $955 saved for retirement. This is according to the National Institute on Retirement Security, NIRS. Now, some of you who are with me now, I'm sure are thinking to myself, okay, that sounds about right. That's how much I have saved for retirement. Some of you, I'm hoping, have more than that, hopefully a lot more than that. But about 56 million workers don't have access to an employer-sponsored retirement plan. This is like a 401k or 403b, maybe a simple IRA or some sort of, retirement plan at work. 56 million US workers don't have this. Workers who do have retirement accounts at work sort of have a median balance about 40,000. So that's good. So we know that companies that offer these plans, that their employees tend to participate in the plans. So Americans estimate that Americans who are surveyed, when people ask how much money do you think you need to comfortably retire, most Americans respond about $1.5 million to retire comfortably. Now that's a big number, right? And that's far different than the average amount that most Americans have in retirement, which is less than $1,000. Now, Social Security may face now a 20% benefit cut starting in 2034 if Congress doesn't act as well. Now, the senior poverty level rose 15% in 2024, which is the highest of any age group. Now, many retirees are actually returning to work due to financial pressure. So this is a major thing. The savings gap is massive. We're talking $955 versus a $1.5 million. That's a big, big chunk. And not to mention what's happening with, inflation and the concerns of what's going on with artificial intelligence and job and work preservation. This is a major problem. So the reason why I put this on your radar is because currently it's February of 2026, which means for those of you who haven't filed your taxes yet, maybe you haven't filed your taxes, maybe you have a little bit of money in your savings and you're like, I didn't know what to do with it. And I would just suggest considering putting that away for retirement. Now, we're assuming, of course, that you don't have excess amounts of credit card debt and you don't have like a lot of debt, right? If you have a lot of debt, then it may make sense to pay down the debt before you save too much, right? And maybe make sure you have some in your emergency savings just in case. But if you're in another situation where you have more money in your savings, but you haven't put away that much towards retirement, let this be a reminder to do that. And if you currently have a 401k or 403b at work, let this be a reminder to review how you're investing, review your retirement contribution amount, and think about starting 2026 a little bit stronger. Maybe challenge yourself to add an extra 5% in terms of contribution. Maybe have your portfolio reevaluated to see if it still makes sense. If you're over concentrated in things that maybe don't make sense, maybe this is time to make some changes, right? To get the help that you need. The good news is there's plenty of help. There's a lot of professionals out there that could give you some guidance, and I would suggest that you look for it. But yeah, Social Security, of course, we know is quite critical. So a 20% benefit would be really a bad thing. So if you haven't done it already, I just did this for my husband and I. But go to ssa.gov and you can go on there and download your Social Security statement. If you don't want to download it, you don't have to. But I would suggest going on there and just reviewing it, making sure that your income was reported correctly, and just look at the numbers and figure out when you think that you might want to start collecting, when you think you might want to retire, and see how those numbers jive. One thing I would say this, and I am actually have preparing a seminar right now for this, is once you have that data from your social security statement, there's so many scenarios that AI can help you um, work on to calculate to make this social security a really really useful tool and something that you can work on then eventually with your financial advisor as well, because there's a lot of data in there that I think a lot of Americans overlook. But yeah, waiting can be real expensive, so whatever you do, time is on your side. If you are still younger, whatever you do is not just about income, but time. Time is actually your biggest retirement asset. So don't forget, I mean, don't wait. Make sure to take advantage of it and do it as soon as you can. All right. So that's what we've got going on. The market has closed. The Dow closed up 230 points in the positive. NASDAQ closed up 203 points as well. A great day for NASDAQ. S&P 500 closed up 47 points, largely because of the news that came out of the Supreme Court that tariffs, well, some of the tariffs just might be not going to be happening very soon because of the ruling. But thank you so much, my friends, for being a part of today's Level Up with Winnie Sun. And if you want to watch past full episodes of Level Up with Winnie Sun, definitely check out Amazon Fire, Samsung, LG, Roku, and of course NASDAQ as well. Thank you so much for sharing the show online. I see many of you doing that. Thank you so much, Joshua and Sadiq, Bethany also, and Jason for doing that this week. Really appreciate it. I think there's a whole bunch of you. I don't catch all of them. I definitely need to do that. But you know who you are, and I want to tell you how much I appreciate you. Thank you so much for your support. Listen to, of course, Yes Factor with Winnie Sun as a podcast on Apple Podcasts and the LinkedIn Podcast Network for more insightful content. With that, be well, and I'll talk to you again very soon. Bye bye now.